All right, and we are live. Welcome, everybody. My name is Nick Hiersche. I'm the president and founder of the Mortgage Calculator. We are a mortgage lender that specializes in all kinds of different loans. And today we're going to go over the state of the market and just go over some of our loan programs for our partners and our loan officers. So first off, we built this tool for our team to just go over different scenarios and check out our pricing. So we're going to go through a couple different scenarios here live on the website and just check out the rates today, as the rates for this morning have just been launched. So this is a typical scenario we have here: 500,000 loan amount, 80 LTV, a regular conventional conforming loan, a purchase, a fixed rate 30 years, primary occupancy, single family, and we have it defaulted to our office location here in Miami-Dade. And our scenario here uses an estimated 760 FICO score, estimated 40 DTI in order to get the pricing here. So we'll go ahead and simply press show rates and see what the state of the market is this morning. So here we have a lot of our conventional programs from all of our partners. We have a bunch of different banks and other lenders that we can partner with in order to get the best rates for our clients. So we have some specialty Fannie Mae programs here. It looks like we have some special Freddie Mac programs here. It looks like, and we'll scroll down to just a standard 30-year fixed here as well. And it looks like the rates are between 7% for a slight cost. And some of our specialty programs are down here to a 6.5% rate. So as everybody knows, with the Fed movement, rates have been very volatile lately. So there's a lot of different reasons, which Jose can get into in a little bit here. He will be our guest that can explain a little bit more about how that works. But let's go over a few different scenarios as well. We have a plethora of programs here. So there's a lot of borrowers that may need to qualify for FHA. So we'll go ahead and put a FHA scenario in here, which might be similar. 80 LTV purchase. I'll have to lower the loan amount a little just to make sure that we're under all of the limits for FHA. And it's going to be a purchase fixed rate, pretty much the same thing, same county, same credit score, same debt to income. And we'll go ahead and click show rates and see what the differences are here. So you'll notice our FHA 30-year fixed rate has a much better rate, but there are some different costs that go with FHA, which obviously bring up the APR a little bit here, as you can see. So there are some different MI factors and other things that go along with the FHA programs. So our rates here range from 6.625 this morning to 6.75. And there's also some specialty programs here at a little bit higher cost. But we have a plethora of programs there available for FHA borrowers who may need those programs as well. And we'll go to the VA next. So those veterans out there that can qualify for VA programs, those obviously are available as well. We'll pull up a similar scenario here, make sure we don't hit any limits, and we'll do a purchase for 30-year fixed on a primary in Miami-Dade with all the same information as our previous scenarios. And we'll see what pulls up. And similar to FHA, the VA-sponsored loan programs are obviously a little bit lower than what we see on conventional. And there's obviously less fees that affect the APR as well. So we have some great VA programs here available from our partners, but they're all around 6.25 to 6.75 rate, it appears. So some great programs there for our veterans. Please contact one of our loan officers if you qualify or want to see if you qualify for one of those programs. And finally, one of the other programs that we have is the USDA. Which obviously is only applicable in certain areas, so the property has to qualify. But let's pull up the rates this morning for that, just to see what we have under a similar scenario. And all of the other things being the same as our other ones. And click show rates and see what our partners have here. So we start at, again, around 6.25, similar to FHA and VA programs. And some range up to 6.625, etc. So these are some great options as well. There are a little bit of costs that affect the APR on USDA with some fees, but great options for those that do qualify, and up to 100% LTV. Now, what we do love here at the Mortgage Calculator and what we specialize in is alternative documentation programs. So I always want to check those out every day as well. Those are under our non-QM programs. And to access those, we go through what's called expanded guidelines, which really means non-traditional financing for us. And let's go ahead and pull up a similar scenario, an 80 LTV purchase for a primary single family home in Miami-Dade County. And this time we're going to use alternative documentation. So some of our favorite alternative documentations to use, for example, are personal bank statements. So for those people that are entrepreneurs or realtors or things like that, we can use 12 business bank statements to determine their debt to income ratio and offer them a loan as long as they are self-employed and can prove their employment. We can use those to document the income rather than traditional tax returns. So great alternative documentation programs here. And we can simply click show rates and go over some options. These non-QM programs are going to be a higher rate, obviously, because they're alternative documentation, but we have some good programs here. So here's an alt doc program from one of our partners, 8.75 for no cost. Obviously, you can get a lower rate if you buy that down a little bit. And they vary. Obviously, these are specialty programs. So some partners, some banks are going to offer a higher rate for different various reasons and various qualifications. So please get with one of our loan officers that can work with all these different partners and work with the one that works best for your scenario. So a lot of different options all the way here up to about a 10% rate and all the way down to about an 8% rate using these alternative documentation methods. So great options there. We also have other alternative documentation, which we can pull up pricing as well and just see where the market is on that. So some of our other favorite programs under our non-QM include our asset-based programs. So these are for people who may be not employed at this very moment, but have a large asset account that they can use to determine a income if they did have to tap into that asset account in order to pay bills. So we're using their assets in order to determine a debt to income ratio. And again, everything else is staying equal here on the scenario. And we'll click on show rates and we'll get similar partners that we can use for these types of scenarios. So rates from 8.875 all the way up to 10, similar rates. Obviously, these non-QM programs are very specialty, and all of these partners that we have very special guidelines. So make sure you speak with one of our loan officers and we can fit you into one of these programs where you may not be able to qualify otherwise. Now, we've gone through a couple different examples. There's obviously a lot of other examples there as well under the expanded options where we can use alternative documentation, as you can see here. But what I'd like to talk about now is some of the great options we have for investment properties. So if we go under conforming, we can go under an 80 LTV for a investment property purchase, which we work with a lot of investors. So these are very popular for us. So conforming, purchase, 30-year fixed, investment, single family, Miami-Dade, and no prepay for a conventional loan. We'll get into those on the alternative documentation loans here in a second. So let's click on show rates and see what we have available for conventional. So conforming, conventional, 30-year fixed, our rates range from 7.5% and up. Obviously, a lot of different options here, and they're all between 7.5 and scroll down, looks like they're just under 8 for most of them. So a lot of different options here. Obviously, the conventional partners, Fannie Mae, Freddie Mac, they obviously have more fees for investment properties, which has been all over the news as well. So most people realize that, but these are still great options to get into investment properties. Now, we cannot use FHA or VA or USDA for investment properties. So what other options are out there? That's really where we specialize at the Mortgage Calculator, is how else can our investors buy investment property? And that's using our expanded guidelines and non-QM programs. So we'll click on this and just check out some of those prices right now and give some great options for our investors. So under expanded guidelines, 80 LTV purchase, investment property. Let's go with, for example, if someone is an entrepreneur and does have those business bank statements we talked about before, but they want to buy an investment property, they can use that in order to determine an income. So let's go with that scenario for an investment. And you can also, on a non-QM program, use a prepayment penalty. So typically our investors will choose a standard 3-year prepayment penalty which typically goes into these non-QM programs to help bring the rate down. So for our scenarios under these investments, we're going to use a prepayment penalty of 3 years for these non-QM investments, just for our pricing scenarios here. And of course, when we're using bank statements, they must be self-employed. So let's go ahead and check out what the marketplace has right now. So these are great options. Remember, for the primary non-QM bank statement, we were around 8%. And you see here, it's a little bit higher because it's an investment, but not too much higher. So these are great alternative documentation options in order to purchase investment rental properties. And our investors love this, right? It's very similar to what they can get for a primary under the non-QM. So these programs are very popular. We have a whole bunch of different options here that you see for these investment properties. And they vary in their programs. So get with one of our licensed loan officers, please, to go over your different options using bank statements to qualify for these investment properties. Now, let me go back to the quick pricer here to show some of our other popular options. So under expanded, we'll go 80 LTV again, and we're going to go investment property. And one of the other most popular options that we are most popular for here at the Mortgage Calculator are our DSCR options. So this is an option where investors can buy rental property and not have to worry about personal income. So these programs are going to use the property income in order to determine income ratio, to determine the ability to repay for that loan. So these are great options where you don't actually have to submit bank statements or any W-2s or anything like that. And we're always going to include a prepayment penalty with these. And for our pricing scenario, we'll do a 3-year prepayment penalty. So we'll see what the marketplace is offering this morning. And some great options. You see here, our DSCR rates are very similar to using bank statements. So these are great options for investors with no personal income documentation, rather than even using a full doc or a bank statement. So similar rates, 9.5%, all the way up to, you'll see probably some up here around 10%, but a ton of different partners, ton of different programs that we have. If you're interested in buying rental properties, please speak with one of our licensed loan officers here about all of these programs. So that's a great scenario for this morning. All of our partners are issuing new rates, so we'll have new rates throughout the day here. But I'll go ahead and stop my screen share here and bring in my co-host, my partners, Kyle, my brother here, partner chief operating officer here of the Mortgage Calculator, as well as Jose Gonzalez, there we go, bring these guys in. Our mentor with 27 years of experience. So Jose, just before we sign off, I'd like to speak with you and just talk about the state of the marketplace. So you can just explain a little bit about what we just saw there for our loan officers that are watching and our partners, of course, as well as our borrowers that may be tuning in.
Sure. Do you need, well, touching base on the rates, you did mention volatility. I'm looking right now at the 10-year Treasury ticker. You know, the securities market did digest a lot of information on Friday and over the weekend. So it is up 0.093. It closed on Friday at 3.482%. Currently, it's at 3.575. Now, what exactly does that mean? Well, for the HELOCs, it's a direct relationship. It directly affects prime rate, which is a short-term rate. So as you know, HELOCs are tracking definitely up as the 10-year Treasury and the short-term rates track up. For the conforming, for the agency products, it's pretty much a similar relationship. They're going to track similar to the trend that's happening with the short-term rates and with the 10-year Treasuries. Now, the relationship becomes a little bit blurred when we're talking about non-QM because there are other factors that affect non-QM business. Yes, it is going to be affected by what's happening with the 10-year Treasury, which is directly related to what the Fed is doing to control inflation. But the other factor in non-QM is liquidity in secondary and how it affects the rates and the guidelines, because they need to have an appetite for those loan packages that are being originated and aggregated and sold into secondary. The good news is market liquidity has improved. They bought almost all of the packages that were left over from when this cycle started having a little difficulty. So we have seen a dropping of the rates in the non-QM products, specifically the DSCR, the bank statement loans, those esoteric products, which when liquidity starts wavering, those are the first to have their guidelines affected. But, there is plenty of liquidity. We have great partners. Loans readily getting bought, so money's flowing. And the investors are loving it. Loans are getting disclosed. I mean, we are getting investors with so excited with the products. They're coming on board and refinancing tranches of properties, 5 at a time. Investors with 30 and 40 properties rolling over from hard money into the DSCR, which is basically very similar to hard money, except with a lot more benefits, like a 30-year term as opposed to a 2 or 3 year term.
Exactly. So those are the products we absolutely love here at the Mortgage Calculator. But I'll go ahead and let Kyle close it out. We'll go ahead and host this show every morning that we can in order to speak with our partners, our loan officers, and of course our borrowers. We'll go ahead and close it out here, Kyle.
Yeah, no, I just wanted to mention, what Jose is saying and a lot of what he means, how it works out in the marketplace, especially for us, is a lot of investors, right? As Jose was saying, a lot of investors using programs like the DSCR, which, as Nick touched on earlier, no employment verification, right? No income verification, based solely on the property's cash flow, right? Rents are high right now, right? Everybody knows that. So it's easier for investment properties to cash flow. So the investors are taking advantage of that. So, definitely reach out to us. We have over 345 loan officers that can do loans in most states. So we definitely specialize in a lot of the investment products and then a lot of the non-QM products. So while we can help you with conventional FHA, VA, and all that kind of good stuff, our loan officers take it a step further to have the knowledge and ability to service clients that are looking for non-QM loan specialty products, especially investors, with our very popular product, the DSCR.
All right.
That's it. That's all I wanted to touch on.
Thank you guys for joining us today, and we'll see you tomorrow. Thanks, guys.
Thank you.